What is good, YouTube? We're back with another video. Today's video is just going to be going over what I would expect for the upcoming weeks, given that we are well above all-time highs. We just keep pushing and chugging along. So we're going to go over what I would expect going into this upcoming week and the rest of the month. So if you're not in the free Discord, go join it. It is linked down below. Other than that, this is what we have going on for this week. Monday we have no news, so for Monday, given that we have CPI on Thursday, I would expect us to probably range out with Seek and Destroy. Tuesday we have Fed Powell speaking, same thing with Wednesday, and then Thursday we have that CPI data with PPI coming on Friday, right? So these news events, there's no reason to think that we are going to flip bearish right now. There is absolutely zero reason. If we look at the weekly, it is constant internal to external, right? So I would honestly still expect us to keep pushing forward. There's no reason to try to short this. If now that we are at all-time highs, right, we have zero price targets, right? There's nothing to the left of us. We have to use standard deviations in this situation. So if we take a look at the weekly chart here on NQ and we want to measure out these standard deviations, right, this would be our manipulation leg, takes out these lows, and then we get our impulse drive higher. Where do we expand to? Well, we go to -1, -1.5, -0.5, and then where do we go? We return into internal liquidity, right? Right here is -1 and -0.5 is where you would expect a accumulation or distribution to occur, which we see right here inside of this imbalance. And then we get another expansion. We go straight to -2 and refusal to close above that, right? So refusing to close above that. And what would you expect after that? Well, we would expect premium or discount of a range. This never comes down to a discount. So why did we not come to a discount? Well, we form SMT here with the ES. So right here, the 29th of January, right here, the 29th of January. So we form that SMT with the ES, right? And if we want to look at ES as well, we can take these standard deviations and we can see -2, -2.5 right here. And if we mark out -2.5, we can, oops, right there. We can see there's no closure above -2.5. So no closure above -2.5, we get a retracement. That SMT is our light bulb to say, hey, reversal could be occurring. So if we go down to the 4-hour, we can see displacement up, weekly SMT. So 4-hour displacement holds the first imbalance, displaces higher, and then you can see that we just continue up. So after that, where would we go? Well, we can expand to -4, right? So -4 on the ES is sitting up here at 42. Now, if we want to do something else, right, if we want to include another standard deviation, I would use this right here. Now, why would I use this? Well, this is the failure swing, right? We have a low, we create a high, come down, but we never take this low. So this right here would be our failure swing, and we have just hit -2. If we want to do it on the NQ, right here, we have hit -2, -2.5, and then we had a accumulation here, and now we're expanding above. And what do we see? On the NQ, it's a lot clearer. -4s line up with each other. So these -4s line up, and I would expect us to honestly probably get up here to 21.5K. That's another 1,000 points on NASDAQ. Now, I'm not saying we're going to expand straight there, right? We could obviously, Monday, I would expect something like this. Tuesday, Fed Powell speaking. We could create low of week. CPI, no. Let me check. CPI is Thursday. Fed Powell on Wednesday. So I would expect us to probably, unless we want to just keep expanding, but I would expect some range to be put in. Right, we've had 3 just straight up days, classic buy days. So I would expect, dude, I would expect the beginning of the week, right, Wednesday, Thursday, wait, Monday, Tuesday, Wednesday, to create some sort of range, and then Thursday CPI could send us higher. Now I'm not saying we're going to hit this week, but it is a possibility with CPI, because we know CPI likes to expand, right? So -2, 2.5 has been reached, -2, 2.5 on the weekly reached, retracement, failure swing here, expansion to -2, 2.5. We get an accumulation where internal range liquidity, which is also what, a weekly imbalance, but this one is smaller. So whenever you have a big imbalance like this, you can measure this one out, and then what else can you do? Oops, go down to a lower time frame. Oh, hey, boom, now we're smaller, right? So you can just keep doing that. 4 hour, this imbalance was already tapped into, but you can just use it again, right? As you see, we tap it and then we continue higher. So you can, if we have a big imbalance like this, no matter on what time frame, 15 minute, if you see where 15, we can see, if I doubt this one would. 15 minute, yeah, I mean, I guess it does. 15 minute comes down to a 5 minute, smaller. Let's see if the 1 minute, 1 minute, even smaller. You could literally use that. So you can just keep going down in time frames. As you see, the bodies hold this. So no matter what chart you're using, you can just keep scaling down time frames to get smaller fair value gaps. But this is what I would expect. There's zero reason to try to short this. There's nothing saying we're going lower. So until this daily chart creates structure, right, and then displaces lower, and then we can start to look for shorts. But day to day, I would much rather be positioning myself to get in longs. So the standard deviations are going to be your guide to picking price targets, right? So let's go over the long that I took, right here. After we take this buy side, these are all-time highs. Now where can I target? Well, we can take out these standard deviations, and I could target close to -2, right? We don't quite get there, but on this manipulation leg, I would use the bodies, because these bodies, or this manipulation leg's quite large, and there's no buy side level to the left of us to line it up with. So whenever we have a manipulation leg this big, right, power of 3, accumulation, manipulation, I wouldn't use the wicks on this, just because it is a larger manipulation on the 1 minute. And as you see, we come into -2, 2.5. We actually tap 2.5, and then we fall off of it. We do retake this high. Okay, so once again, you have to, like, these manipulate, like right here, bodies again, -2, misses it by what, like a tick? No, I'm off on that. Right there, yeah, misses it by literally like a tick. Then we continue higher, -4, eventually does get hit. So once again, right here, this is a 5-minute manipulation. I remember it just because I was trading. Right here, 2.5, retracement to what? OTE. OTE hits 0.79 to the tick, expansion to -4, retracement back to where? OTE, continuation higher. You can measure out this one. There's actually no swing high put in. So yeah, these standard deviations are going to be your guide into finding where price is going to want to go, right? Right here, -2's hit on this candle here, accumulation, come up, -2.5, right? We take out both sides, expansion to -4 right here, right? And if you see a manipulation like this in the overnight session, it can play into New York session as well, right? As you see, we hit -4, retrace. Let me get rid of some of this. We retrace right there. We hit that -4 on this candle, retracement, and then continuation. So standard deviations are going to be our guide to picking price targets. Now, if we want to take a look at oil, I have not traded oil in a long time because this price action, I just haven't liked it. If we want to take a look at gold, gold actually looks like maybe we want to take this high. Well, obviously we do. But we have created equal lows down here, so this is going to become a future target. Now, I wouldn't be targeting these until it says, hey, I'm ready to be going down here. So right now we are just stuck inside of this range. I wouldn't be doing anything on gold either, therefore I haven't traded it in a while. My main focus, NQ and ES, and once again I would expect -4 max expansion to be targeted on NQ. ES, that is 221 more points, which is doable. So this is what I would expect the rest of the week and the upcoming weeks and going into the rest of the month. Literally just a continuation. -2, 2.5 has been reached, but as we know, NQ has closed above it, and NQ looks to be leading these pairs, right? If we want to measure from this high, we're up 0.68% on ES. This high, oops, dude, 1.32%. So NQ's leading these pairs. YM has been the dog of them, not even at all-time highs. So I mean, can't really do anything about YM. I don't trade YM, so yeah. Anyways, that's gonna be it from me. Just gonna be looking for continuations. So hope you enjoyed the video. Other than that, I'm gonna be out. Peace.